Hello, Charles here. And in this presentation, I'm going to go over our market commentary for the upcoming week. It's been a minute since I've done a video with market commentary. Most of you just preferred me to put up the new defined ranges and kind of a plan of attack, but as far as a video, it's been a minute, so I just kind of felt like doing it. Here. Hope you guys have all been well to the new start of the year here. Alrighty. Now, last week, so this would have been on the 10th of January, the New Zealand dollar. This was our new defined range. Bring this over to the 10th so you can see what the price was. It's right there. Okay. And then on the evening of the 10th, we actually broke to the downside, okay? Because I do these on the weekend, so obviously market is not open. So the last trading day was the 8th. The 10th was Sunday, and we broke to the downside pretty darn quick. Price came down a total of 62 pips from there, but per the instructions of our market commentary, I really suggest doing a trail stop of around 25 pips or so, okay? So if you use a trail stop, then you should have gained about 50 pips from that move. So that is good. I'm just gonna grab a little sheet of paper here so I don't forget. Usually when I'm doing my market commentary, I go into each, and kind of add where price moved to the previous week and all that good stuff. So I'm just going to write it down and do that after. So that was a real nice move, real clean, straightforward, and a nice little 50 pip gain. Potentially more, depending how you trade this. So for the upcoming week, as far as a new defined range, what I like to look at is the previous support and resistance. If you're new to that, it can be a little hard to just eye it, okay? Everybody has a different level of expertise when it comes to trading, okay? And there's a lot to it. There's a lot of different things you can learn. I think, support, resistance, supply and demand, those are definitely something you should learn kind of right off the bat and just continue to grow your knowledge in the future. We do have some great little indicators. If you are not well-versed in creating your own, let's see here. What do we have? Here's a support and resistance. So this is the slick trade support and resistance. So see, it puts these lines right in there, okay? And it tells you what they are. D1 resistance, H4 resistance, week 1 resistance. This is a great little tool. Whether you're good at drawing it up or not, honestly, I feel like you can still get a lot from it, okay? So that is in your file pack if that's something you're interested in using, and obviously part of your membership. So where I'm drawing these lines, it's not directly at those lines, okay? But I like to draw this kind of at that candle wick, okay? Because if you go back, you see price pushed up, and you see these little wicks kind of coming above here and coming back down, okay? It's creating some resistance. Price is trying to break above there, but it's experiencing some resistance, okay? So if you look at this, the D1 support okay, it is right at the bottom of those candle bodies where that little resistance happened. Just in case if you can't see this very clear, here we go. That's what I'm talking about, okay? So when you see price creating these wicks and kind of moving back and forth in between certain levels, for example here, okay, these are some key support and resistance, okay? And if you look, so I drew my line here. Weak resistance C is here, just slightly above, okay? So when you draw this and someone else draws it, you're going to get kind of mixed results, okay? There's nothing perfect out there, all right? There is no magical, this is the magic line for you, okay? You just gotta kind of eye it, okay? And get used to drawing it in. If you look here, in between these levels that I drew, see that right there? That H4 support? Again, you see price come up, bam. Comes up, boom, up to the next. It's all about levels. It's all about past price history, okay? Defining those levels and then looking at the pattern. Look at what price does, okay? So that's really, when it comes to finding the new key levels for the upcoming week, that's really all it is. I'm drawing in support and resistance, okay? And yes, I love the professor setup, and I like to really look at that. I like to look at where prices compared to our Hall moving average here, okay? I like to look where it's at in comparison to our trend rider. And I like to look where it's at with supply and demand, okay? But I still always draw those levels in. And when it comes to the, this is the 4-hour time frame, okay? When it comes to the 4-hour time frame, this new defined range, okay, or these key levels, I like to keep around 50 pips or less, okay? So let's go ahead and just grab those. So that's 42 pips. That's perfect, okay? And dead in the center, we've got, well, not dead in the center, it's pretty darn close to the center. We've got that H4 support. Okay, so everything lines up perfect, okay? These are some great levels. So I'm just gonna grab those and put them in the post for you. I'm working on a market commentary expert advisor. We'll see. It's pretty crazy and in-depth. Has a lot to it. So it may be a while, even if I can make it happen, honestly. We've been talking about it, and I think it'd be really cool because then you don't even have to, you can move levels, it can define some levels based on whatever inputs you put, and then it can actually trade for you. So instead of having to set up these pending orders or drawing in these lines and figuring things out, you know, it kind of handles a lot of that work for you. So here we go. So this is the Aussie dollar. Okay, these were our key levels from last week. Okay, as you can see, right on the 10th, when the market opened, that evening price broke below, candle body held. I always talk about this candle body. So when we have a new defined range, if price breaks below or above, if it's just a wick, like say like over here, see that's just a wick, that's not a candle body above, okay? But here, this is. So that's what I'm talking about. When I say candle body, you want that body to actually break and hold, okay? And some people do not. Some people just prefer a break to the upside or downside, and that's absolutely fine. But sometimes, especially if you are not aware of the news, okay, and releases and things that are happening out in the world, sometimes you can get tripped, and you don't want to get trapped, okay? So just something to keep in mind. So anyways, we broke to the downside on that Aussie dollar, and price came on down, a little over 50 pips, but I guess it's like 54, 53 pips, okay? But our initial, see, price came down and then it came right back up. You may, depending how tight you have that trail stop and if it's manual or automatic, you may have only gained like 25 pips from that, okay? So even though this did move 50 pips in our favor, I'm just going to put in the results that it was 25 because that could have been, multiple things could happen there. And again, depends how you trade it. But as far as results, I'd rather put less gained in the results than what was actually gained than to put more and have people wondering like, wait, how'd you get that? So you may have gained more, you may have not. That's about it. So for the upcoming week, this lower, well, previous, it would be support, okay, from last week, but now it's become resistance. And I'm gonna slightly bring it up just to the top of that wick right there. Let me zoom in, that'll help, okay? So right here, because you see right here, there's quite a bit of resistance here. And it's, I mean, you can bring this right down to the candle bodies like this, okay? But I'm just gonna go ahead and include those wicks, I think. Let's see what the full range is before I fully determine. And I'll bring it down to these wicks here because you can see price really kind of hit this level multiple times, okay? And you see some wicks breaking, but you don't see bodies really breaking, so I think this is a pretty solid level, okay? So let's see what that range is. Is this a good, it's a 43 pip range. I think that's perfect. Actually, I think NU was also 43. So, beautiful, okay? So let's go ahead and grab these levels. I'll put them in the post for you. If you guys have any requests on some upcoming tutorials, let me know. I'm making a list for the year, so if you have requests, I can add them in there. It may take time. It could take a really long time. All right, I'm not promising anything. All right, I like to have a nice order to things and stuff like that, but I absolutely love to make sure I'm creating content that you guys are wanting. So, and I know everybody's, again, at a different level and all that. All right, so here, so this is the dollar franc, all right, it's a 4-hour time frame. Excuse me. Here is the 8th, so this was the last day. This was the last day of the trading week, and then I set up the market commentary. So this on last Sunday night broke to the upside. Candle body held. Beautiful move up. Okay. So let's see. Moved a total of about 53 pips. Okay. But same thing. We had this break to the upside and then kind of came down. It didn't quite come back to this level, so it should not have hit your trail stop if you have an automatic one. It really shouldn't have, okay? Unless if you have that trail stop instead of it moving to break even, if you haven't moved to a positive pip, then it definitely could have. So I'm just going to say that we gained about 50 pips out of that, okay? Maybe you gained a little bit more, maybe you gained a little bit less, but that's roughly it. So for the upcoming week, let's define our support. Bring it right up to, I think this is actually a little bit better level. And our new resistance here. See back here, so we're going back a little ways. Looks good. What is our range? $24 is all. Oh, I guess because I'm zoomed in, maybe I'm... Oh yeah, that's a little too tight. Oh, so actually, when you zoom out, look at this. We have come to a point where if price breaks above this level right here and candle body holds, okay, so if it continues heading up, then we're going to break the previous, this is a key resistance for us, okay. We were in a pretty heavy short, okay. And then price, you know, it really consolidated between these two levels. We had a continuation right here, but then it's come right back into these levels, okay? As you can see here. So we could be looking at full trend reversal, okay? We will see. With that being said, I am actually going to bring this up just a little bit because this is a pretty pivotal moment if it is switching, okay? Plus, like I said, that was a pretty small range, so I like to make it a little closer to 50 pips anyway. So I'm going to say right here. So our previous high over since beginning of December, end of November, is right here. Okay, that 0.89121 level. Okay, that is a key level to us. Okay, because if price breaks and candle body holds, we're more than likely looking at that trend reversal to the upside. Okay, if it does not, it could fluctuate between this level, this level, this level, this level, and this level. Okay, or it could even continue down. So if it breaks, let's say if it starts going down, okay, and it breaks below that 0.88215 level, then we could very well see a continuation to the downside. Okay, so this is only a 4-hour chart. This is small time frame. What I like to do when we're getting real close to a pivotal moment like this is really look at the longer time frames, the daily, the weekly, the monthly, what is happening, okay? Because that is a much better indicator on whether price is actually, you know, whether it's in a deeper correction phase, whether it's in a continuation. Looking at those longer time frames is going to give you a much clearer idea on what is really happening in the market. Okay, so this is still kind of a small range. Okay, this is 33 pips, almost 34. But I'm going to say that that's good for this one. Okay, I like the way this is set up. So that's what we're going to go with, all right? New defined range here. If you're new to the room and you haven't gone through the learning material, you don't understand what's happening with market commentary, if you're new to the market, any of that, definitely go through our training tutorials under the member area. I want you guys to be able to just follow along with me and understand what is happening, or just open a market commentary post and have a clear understanding of what it is I'm looking at and why I've chosen the levels that I have for key levels, okay? Here's another solid, clean setup, okay? This is on the Eurodollar from last week, so these were our key levels. This was on the 8th, and then I set up the market commentary, released it, and the 10th, it broke to the downside. Candle body held right here, okay? So, price moved in our favor. 56 pips there. Depending what you got, I would think you'd be out of that trade with it coming back up into this range. If not, you could have gained more. Or if you're looking at other time frames, things like that, you could have gained over 100, 110 pips there. But I'm just going to go ahead and put this initial, because you've got this little range right here and then it comes back. So it's 54 pips. So I'm just going to go ahead and put 50 as the result. Okay, and for the upcoming week, so let's go ahead and plot out our plan. That's a pretty solid level right there. You can see price pushing back there. Pretty solid, actually, that works. And what is our range here? 58 pips. I could bring this in just a little. I don't really want to go too much above 50. Let's bring this in just a little here. Let's bring it right to that wick, because that is still solid here, here, and here. Let's see what we got with that. 51 pips. Perfect. Okay. So, bam. Alrighty. Now we've got GBPUSD. I'm just going through the 4-hour time frames first, then we'll go ahead and hit the dailies. Perfect. Okay. Maybe, maybe not. Oh, wait a minute here. 3691, 362. Well, okay, so I made a mistake last week. It looks like I only changed one of the levels. I changed the upper, but it looks like either I had a typo or I bet you that was from the previous week for the high. Let me see. That would be the 31st there. Yep, this was okay. So if you traded this, then nobody told me that there was a mistake on that one. Sorry, guys. If you happen to set this up, okay, price did break this level. So if you happen to trade this at all, then like to the upside as far as breaking, you could have gained 60 pips, 61 pips there. I'm not even going to put results in there, or that we gained anything from it. That's just my mistake. That's kind of funny. So human error right there at its finest. So for the upcoming week, let's see what we got. Find the key levels here. That's about though, actually. I think that's pretty good right there. Hitting a couple wicks, couple bodies. It's 58. I don't want to pull that in tighter. Let me pull this in just a little bit tighter. And if we're over 50, then, oh well, 55, 56 pips right there. So we'll go ahead and leave it like that. I know it's a little bit wider range, but the pound dollar has been, it's been on the move. It's moved a lot. Definitely back and forth. I have actually personally been back and forth on whether I want to remove it, just because of the amount of movement that's happening. Hold on, I just want to make sure this saves my changes real quick. Been thinking about removing it just because it hasn't had a really nice clean pattern. It's got a lot of noise, it's got a lot of back and forth, so I'm really kind of debating on whether I keep that in my market commentary or just, I mean, just take a break from it. You know, I mean, it's been a great one in the past to trade, but the 4-hour time frame is just really all over the place. So, okay, that's saved. Cool. Just want to make sure. All right, so that's our plan for the 4-hour time frames. Now we're going to go back to the New Zealand dollar. Okay. This is the daily time frame for the New Zealand dollar. As you can see, we are in an uptrend, okay, or a long trend, whatever term you use. We are headed to the upside, okay? But we did have a pretty heavy break to the downside this last week here, as you can see. Price came down and it broke below, and candle body did hold below our previous high. Okay. Let's draw a horizontal line. So this is here. This was our previous high. Okay. Well, this was our previous high. Okay. But I'm talking about the previous before that. Okay. Price broke below and held below that. Okay. So we could be looking at an upcoming consolidation period. We could be looking at a trend reversal to the downside. Things aren't clear yet. Okay. The key levels that I had, so I said that the NU was in an overall long trend. We had a continuation last week after the initial correction. Okay. Buy on dips, you know. Key levels. These are our key levels right here. Let's see what happened as far as those. Whoops, did not mean to do that. Upper key level. Lower key level right there. So we broke below that key level. I got pauses just. Okay. So we broke below that key level. If you happen to trade it at all for any reason, like if you had any pending orders set up, okay, it did move about 50 pips to the downside. On the daily time frame, I do not recommend a 25 pip trail stop. I personally don't even automate anything on the daily time frame. I like to take a look kind of each week and see where I'm at, and then manually move my trail stop. And I move it based on previous support and resistance, or closer to the 50 pip marker. Okay, may not be full 50, but just kind of, you're looking at longer time frames. You're looking at staying in trades a lot longer. Okay, so that's a beautiful setup. So if you happen to take it, great job. You may still be in it. You may have gained, 50 pips, got out. It depends, again, on your trading style. So for the upcoming week, this is showing, let's see, right here is a definite key level. Okay, so here, boom, boom, boom. Here is where price broke previously. This was back beginning of November. Okay, price had a real solid move to the upside. It had one dip here. Okay, so we got one leg, two legs, three legs, four, and then a fifth right here. Well, not a fifth leg, but a fifth high point here. Okay, so we've come down, and it looks like we might have created the start of the first leg. So what does that mean? One of two things. Price could come down to this level and experience resistance at this support level, okay, and then move back and forth between these levels. Could move up to here Okay, I really see this being our new consolidation period. If it breaks above this level of 0.72401, then it could very easily head up to the 0.73143. Okay, now if it breaks below this, then we could definitely be seeing a trend reversal. If we have a trend reversal, you can expect price to head to the 0.70467 level, 0.70034, and down. Okay, this is what I mean when I say I base moving my trail stops on previous support and resistance versus a number. So let's see what those numbers are. So if it breaks below here, that's 47 pips. So close to the 50 mark. But if you just set 50 and it experiences resistance here and then heads up, then you're stuck. So that's why I always recommend basing it on previous levels. The next level, 44. So even less, but still nice 44 pips. If price hits both, look at that. That's a nice 93 pip move. Okay? And that still doesn't necessarily mean a trend reversal. This could just be our levels for a bit. You never know. Price could just be going back and forth and back and forth. Now, if it breaks above this level, that's a definite continuation to the long side. If it breaks below this level, it's more than likely a trend reversal. But watch this next level down here, 0.70034, because we did have some price movement kind of back and forth, a little bit of a consolidation period right here. So just be careful, okay? It could just be a deeper correction, okay? But if it breaks below this level, then definite. I think we're headed right down to, and trail stop, okay? Right here, here. I mean, it could easily come all the way down to here, you know, and even then some. It could continue. You never know. But that's a huge range. Let's look at what that is. So if it breaks below this level, I mean, price could move 200 pips. If it continues down even further to where we were, 481 pips. So things to keep in mind. Okay. So key levels here. If you're going to be setting up trades and stuff like that, okay, you're looking for a break. Let's say there, and there. Okay, and this, I said, could experience consolidation or trend reversal in upcoming weeks. Or, you know what, consolidation, deeper correction, because that is something that could happen. Okay, and then there's our key levels. Beautiful, right? So AU, the Aussie dollar was in an overall long trend. Last week, or the previous week, we had experienced continuation, and our key levels were here, and we're here and here. And last week we did not break them. Candle body didn't. So those are still our key levels as far as our our tight levels. So we're in consolidation. And we are definitely still in an overall long trend, so I'll leave that there. Last week we did not experience continuation. Last week we experienced consolidation. I'm going to keep those key levels as the same. The dollar franc was in a short continuation the previous week. We ended the week with a heavy push to the upside. Could be time for a consolidation period. We will see. And here were the key levels. And we are still within them. We're definitely pushing up, but hasn't broke. So we are still in those levels. Okay. We could see consolidation still in between them. If we break above, then I would expect that price would head up to 0.89470 next. Okay. And from there, 0.89839. Okay. Which, let's see what that is. So if we break up, that's a 32 pip move initially. From there, up to 70 pips. Okay. So, something to keep an eye on. If you're not familiar with the dollar franc and the euro dollar, their relationship, I guess is a good way to put it. They are mirrored pairs, okay? Or mirrored assets, whatever you want to call it. So, when looking at these on the longer time frame, usually if price is headed up on the dollar franc, it is headed down on the euro dollar. So, along with these key levels, take a look at the euro dollar, okay, and see what it's doing. Also, look at upcoming news, okay. So, I'm going to keep those same key levels on the dollar franc. Currently in a consolidation period. Okay, which is what we had expected. All right, key levels are the same. So euro dollar, it was in an overall long trend, and it ended the week with a heavy push to the downside. Could be time for a consolidation period, and here's our key levels. Bam. And we broke. Okay. So end of the week, it could be time for a consolidation period, but it actually pushed even further to the downside. Okay, so what does this mean? This means it could be a deeper correction. Price has come down to a key level, which almost down to a key level. I mean, it's at it. It's like real close, which is right here, this previous, okay? So I would say that if price continues further, it's going to head probably to the top of this wick, okay? It did break below the Hall moving average right here. So we really, looking at this versus the dollar franc, we absolutely might be looking at a trend reversal, okay? You still want to play it, you know, like we are in that consolidation period or possible deeper correction. If this is just a deeper correction, then it will probably come down to this 1.20159 level and then kind of bounce between these levels, potentially even these levels, okay? That's a pretty big range considering this is the daily time frame, but, you know, just a thought. Now, if price breaks below this level, candle body holds, and we could expect it to come here, here, and continue down from there. Okay, but we will see, because right here we had some serious consolidation. This is a big range of consolidation. Okay, so we'll see what happens though. So as far as new defined range, okay, or new key levels, okay, I'm actually going to bring these in just a little bit tighter here. Or actually, no, you know what, I'm not. I would say this is a key level for sure, 1.20710. But that is not a big move, okay? So you could get in at that point. It is 52 pip range, okay? So it could move nice. I'd take a look at that 4-hour time frame, see what it's doing, okay? But as far as the daily is concerned, I would say here is a stronger level, and this upper level here. Actually gonna add it right here because we experienced quite a bit of consolidation there. So I am going to so currently in a consolidation period or deeper correction phase. Okay, our new key levels here. So here and here. Like I said, you can go for those ones that are tighter in there, but just be aware that could change, okay? We never know. So GU. See, when you now, like I said, in the 4-hour, it was really back and forth. It's just kind of all over the place lately. But if you look at this longer time frame, overall, it's not very clean, but it doesn't look as bad as that 4-hour time frame. So maybe I'll keep it in here. We'll see. See how it moves this week, and then next week I might just eliminate it for a while. But we are still within the key levels. We are still in a long trend. Okay. I'm just going to kind of keep it the same. Okay. The overall long trend, currently in consolidation. This is our consolidation. If it breaks to the downside, then you could expect it to come here, here. If it goes to the upside, I would just trail stop it up. That's kind of about it. It didn't do much. It just kind of went back and forth in between the same key levels. So that's about it. So that's our plan for the upcoming week. Again, let me know if you guys have any requests for, some learning material, videos, things like that. And also let me know if you like these videos for market commentary. I will continue them. I just haven't for a while because people kept asking just for a post with the key levels and kind of plan of attack. So you guys have a good one, and I'll see you in the room.